The Super Citizen Initiative is, I think, a representation of the fact that Miami is at a tipping point. We are at a special inflection point where we define what the future is going to look like. And the future can be what we want it to be if we're all engaged, if we're all connected, and if we're moving forward in the same direction. As we think more about tipping points, I'm excited to transition to a really interesting conversation about that very topic. Tipping points can be subjective, objective, and they really depend on the circumstances. So our next conversation is focusing on tipping points, when the impossible becomes inevitable. Please join me in welcoming to the stage Samara Hernandez, founding partner of Chingona Ventures, who has actually raised 2 funds, Elias Torres, who is the co-founder and chief technology officer of Drift. We have Andrew Collins, CEO of Bungalow, and moderating our conversation, Bo Wren, who is the director of early stage startups at Silicon Valley Bank. Let's give them a warm round of applause.
Thank you so much for having us today. That was an amazing introduction. We're here today to really demystify and talk about tipping points, which are oftentimes inflection points, elusive inflection points founders, operators, VCs are chasing. But you can oftentimes look at them in retrospect with hindsight in 2020. So today's goal of this panel is really to talk to our deep bench of experts. How do you identify and find a tipping point? So let's start with you, Elias, since you're the CTO of Drift, having built a $1.2 billion company generating $100 million in revenue. Are there such things as tipping points in product development?
Yeah, I'm not sure why I was invited to this panel because I don't believe in tipping points.
Spicy.
Yeah, I think everybody's looking for like an easy answer, right? That it's like, oh, you do this, and then your company went just exponentially growing. But the reality is that it takes a lot of decisions that are compounding over time that end up taking you to a place, right? You can make a decision and say, I'm going to do a pivot, attack, but in reality, it takes a long time for you to become confident that that's the right decision, and it takes time for that decision to be validated. So really, it's about putting the entire work, right? You have to think, you have to get advice, you have to learn from others, try it, and then see if it is the right decision, right? And then we can look back and say, maybe that was a great point for our company.
So when you were starting Drift, was there a messy, kind of chaotic process in which you found your tipping point? Were there multiple tipping points?
Yeah, absolutely. So David and I were already founders before. We had worked at prior companies. We had just left HubSpot right before the IPO. And so when we started, we had a million ideas, and we were trying a product a month. And we were giving up on that idea. And so we were constantly pivoting until about 2 years, we were like, it's time to choose something and build upon it and stick with it for the long run, right? So that was a tipping point, but it took us 2 years to get there. And so I think that that's just around our product, right? We had to choose a market, we had to choose a user, we had to choose a problem, and really go work on it for a long period of time.
Yeah. Well, thank you for demystifying all the hard work you guys did. It's not as easy as people make it out to be. I'd love to kind of take some time, Andrew, and talk about marketplace business models. They're incredibly complex. You've built a tremendous business model at Bungalow with 1,300 homes in 20 different markets in the US with over 4,500 residents. How did you overcome the cold start problem?
It's actually really interesting. A lot of similarities for us as well. I think from a marketplace perspective, usually one is almost always supply constrained. And so when we first started out with starting Bungalow, we did an enormous amount of research, a lot of testing and iteration until we found on the demand side a kind of product market fit and framing that just tested off the charts. I think before we even had our very first property, we had 4,000 potential resident signups in the first 7 days of launching our website. And then that really allowed us to focus the bulk of our energy in the early days on building what was that specific supply unlock that would really help us scale. And a lot of that, it doesn't come easily. It is a lot of hard work. It's a lot of iteration. It's a lot of qual and quant customer research to really see what sticks. And then ultimately those pieces compound over time until you really do kind of find an inflection point, and all of a sudden it feels like that boulder that you're pushing uphill starts running downhill, and then you're just trying to build the systems around it so you can keep up.
And I'm curious, like when you were testing and iterating and doing a lot of these micro innovations, was there a singular product market fit aha moment for you?
I think for us, there really wasn't. I think it was a lot of rapid iteration and then just kind of looking both at the metrics and ultimately a feeling of there's something here, and this has become infinitely easier than it was. And I think, there are also, and we'll talk about this potentially later, there are also different types of product market fit for different stages of company building too. How you get to that first $1 million in revenue is wildly different than the next 10 million and then the subsequent 100 million. So it really does continue to take that iteration.
Got it. And I'd love to kind of dive deeper into how COVID impacted you guys. Having, being in the real estate market during a pandemic, we all know a lot of evolutionary efforts were necessary. So how did you guys evolve?
Yeah, so very quick background. I think for us, we managed, 800 some odd properties going into COVID, very much focused on helping bring strangers together to live in properties. And so, first principle, where's probably the last place on earth I'd want to live in the early days of a global pandemic? It's probably in a space-optimized apartment in Manhattan or San Francisco with 4 strangers. So it was a little challenging, but really there's nothing like having a crisis to really drive and force innovation. I think this really does come back to amazing people, really narrowing the focus on what are the things that one must do to survive. And then ultimately, frankly, it was a lot of decisions that we had made before the pandemic. There's a great book called Loon Shots that talks about how you can structure innovation factories and departments within organizations. And so we had already been tinkering on introducing a whole homes product, which moved away from just the individual rooms to rent. We had started tinkering on a supply side product that enabled investors to actually go and buy properties through our platform. And really, ultimately it forced us, I think, real clarity of thought to just move incredibly quickly in decision making. And some of those loon shot ideas that we had been incubating in a very small clustered part of the organization, ultimately now, I think the whole homes product is 55% of our properties today, so it's surpassed the rooms for rent. And where we expect a lot of the supply side growth, I think everyone knows how challenging rents are, especially in Miami, New York, and others. Homeowners have not necessarily needed to go to a property manager alternative to rent their properties anymore, but investors are clamoring to go buy single family homes and gain access to those properties. So a lot of those loon shot ideas that we've been incubating over time have compounded to be able to drive the next sort of vectors of growth for us.
Awesome. Sounds like you guys had a lot of pre-baked work already in preparation for the pandemic that panned out.
Yeah. And the last thing I'll say is, but you just have to kind of think on your feet. So we had been on kind of a master lease sublease model as a business model prior to COVID, and it was very clear. My co-founder and I, we didn't want to go through and break all those contracts with our homeowners. It's a horrible customer experience, and if we kind of zoom back to 18 months ago, or I guess almost 2 years ago now. In the summer, it felt like things were coming back in 2020, and so we thought we were going to be fine, and we circled Labor Day and said if this, for some reason, goes off a cliff or something changes, then we're going to have to go change the business model. And so Labor Day, sure enough, demand dropped, And we'd already formulated this plan post-COVID, and it was just, let's go attack this. And so we shifted 90% of our properties over to a percentage of revenue. And it truly transformed the unit economics of the business.
Great. Shifting gears here, talking about fundraising tipping points. Samara, you're a founder in a lot of ways, having raised your own fund, Chingona Ventures. I'd love to learn more about how you encountered or identified your fundraising tipping point as an emerging fund manager.
Yeah, and I'm going to talk about it from a fund perspective, and I invest in super early stage companies, so I've seen it kind of on the fundraising side, on the fund side, as well as on the startup side. But specifically on the fund side, we talked a lot about all the work that you do prior to a tipping point, and many times in hindsight, you don't realize you're getting towards a tipping point, or you're just working towards something, and you have this idea. And many times as a founder, you have this idea that you see many years before others see. And you're constantly getting no, or you're getting told you're not going to be able to do it, and you somehow have to kind of work towards it. And there's some thing, it might be a tipping point, some environment, some pandemic even, that will cause you to actually accelerate whatever you're doing. So for me, I had been in, my background is finance. I had been in venture capital prior to starting my own fund. And at the time, it was before a lot of the recent movements. It was before really anybody was raising a fund. And I was doing it all from the Midwest in Chicago, right? Not from the Valley. And I had, for years, advised founders that had real traction, real revenue solving, real problems, but they didn't have the Stanford degree, or they didn't have, they didn't have the network, but they had a real business and they were growing. And so I was advising them, and I was like, they don't need any more advice, they need capital. And so at the time, I was like, okay, I don't know anybody wealthy. I'm not wealthy myself. I don't know any institutional investor that will invest in me, but okay, let me just go out and do it. And when I went to go raise, people are like, oh, you're doing a nonprofit, or is there really enough founders that will take your money and back, that you can back? Are these going to be billion-dollar businesses? And I'm like, well, I have these data points that if I would have invested in this company, they would have raised additional round of funding, they would have exited. And so I just went off and I just kept talking to people. I was like, I don't even care if I raise $1 million or if it's just a group of angels, which I started to do. Mm-hmm. And eventually I started talking to enough people that were like, okay, they see your energy, they see your passion, and they connect you. They connected me to my first anchor investor. And that's one of the things I learned, is that it's not that you need 100 people to say yes, is you need one right person to say yes, and then introduce you to a bunch of other people. And it was my anchor investor for Fund 1. Again, they were like, okay, I don't even know if this is gonna work, we're backing you. And the name Chingona in itself means badass woman in Mexican Spanish. Yes. And that's what we're investing in, right? Badass founders. And it's really chingona from a Latina immigrant with no money, with no background, no wealth, to raise money in a space where there is a lot of wealth, and you look very different, and you're investing in very different types of founders, and one person, backs you. And it was my first investor. I was able to raise it in April of 2019. We made 27 investments. And then more recently, people were all of a sudden interested in these types of founders, right? There was the recent equity movement after an unfortunate situation where people are like, what is going on in the venture capital space? And when I came in, that was another tipping point where I didn't know that it was going to happen. Very unfortunate, but this has been happening for years. This is not something new. It just came to light. And so that's where I got, when I went out to raise my second fund, I had experience in venture capital. I had invested in these types of founders. And so I was able to move a lot quicker in my fundraise. It was never easy. I think all of us will tell you, it's never easy, even though in the news you'll say, you get the end part of the story. Oh, so-and-so raised, and they're doing so well, they're so successful. It never is, it still isn't. But then I was able to raise my second fund. I just closed a few weeks ago, and we're just gonna double down on these founders, put more money in, they need large checks. They don't need small, they need large checks. They need someone to back them before anything else. So we go pre-product, pre-revenue, pre-track, pre. The scariest part, right? And many times these founders don't have wealth, don't have angels, don't have friends and family. They don't know what friends and family is. So I am their friends and family. I'm their first and largest check-in.
That's a quote.
That's amazing.
That's what Chingona means.
Yes, that's incredibly inspiring.
I think
I'm curious how, yes,
I think
Elias,
that
go for it.
Now everybody doesn't believe in tipping points. I'm gonna switch my side. I'm gonna now believe in tipping.
All right.
So I think that there are tipping points. I think I'm just gonna point out to someone in the audience and just embarrass her. So one of my tipping points, I think tipping points are go-to-market, product, investment, but I think there's personal tipping points, right? Really key moments in your life that will change the path of your journey, right? And so I think there's a woman here, Patsy Sanchez. She drove from Tampa today, and she's saying hi to me. She was the one who awarded me my scholarship to go to University of USF. And so those are like tipping points. If I couldn't go to college, then I wouldn't be able to be here today, right? So I think that we should look at tipping points in one meeting, one conversation, one introduction. I met Samara like, 4 years ago in a speaker room in the back, and she says, I'm raising a fund and I'm Chingona. And I was like, holy shit, so it's.
And he's an investor now.
And I'm an investor now, and I was like, and I had no money. So I think that there are tipping points.
Yeah.
I'm glad you're a tipping point convert. Elias. You definitely brought a very controversial view to this panel.
And I'll switch again by the end of the panel.
Great. That's what keeps things interesting. I would love to kind of dive deeper into, Samara, the tipping point that you encountered of one hell yes in 100 no's.
Yeah.
How do you motivate your portfolio company founders to find their hell yes in their fundraising and company building journey?
Yeah. And look, I know this is a controversial topic in venture capital efficiency, right? Actually making money and getting to profitability. Like, a lot of the founders that I back have a lot more traction, have to be capital efficient, have to have cash flow because they need enough time to get to a tipping point. And time requires many times capital. It always takes more money and more capital, or more time and more capital to get to that tipping point. What is that? It's your first customer, it's your first product launch, it's your first $1 million in revenue. So for me, I look at obviously the founder but a lot of times founder and product and all that, but a lot of times they ask me, what do I need? What's that MRR? What's that CAC, AOV? What do I need exactly to get to that next stage? And the answer is, you don't know. Right? You could have you could have double month-over-month growth. You can have all the perfect metrics, but you're in, I don't know, aging tech, which not a lot of people are doing right now, or femtech even. Focusing on female health and wellness, which is something I focus on too. And there's no investors. And so for me, a lot of times what I focus on is yes, there are certain traction and milestones that in general people want to see, and I make those introductions and you tell the right story. Earlier on it's all about the founder and the story. But for me, there's one specific case where it was there's two companies I invested in right away. One of the company founders is here. It's my best performing company, and they did a lot of things right. They were super capital efficient. They raised a ton of money. They're gonna get to my first unicorn, I think hopefully in the next year. But this next company I invested in, they were in a marketplace, art marketplace, okay? And they were building this underlying blockchain solution to track the value of the market. Now this is June of 2019. So we were like, marketplace, art, like who's buying art? Is that an asset class? And I really love the blockchain solution. So I'm a fintech investor as well, heavy fintech investor. So I'm like, this is interesting, tracking the artwork, using blockchain. They made it super easy. You take a picture of the code and then you actually buy it and then, right? So this is,
Sounds like a terrible idea.
At the time, everyone was like, why are you investing in this company? It sounds like a terrible idea. Fast forward now, NFTs are the thing. Everyone's investing. And how many times we've talked about NFTs at this conference? And I unintentionally invested in an NFT company. And it's now, she was literally selling into real estate at the time. And COVID hit, no orders, no money, and she was capital efficient, and she just kept grinding and building out the technology. And now she's raising at a very large valuation, a huge round, and all of a sudden people are like, oh, you have actual traction. You've been building this for 2-3 years. You actually have a product. It's actually working. And so that's what I'm saying, a company where it wasn't obvious, people weren't investing, but she bought herself time. She was super capital efficient. She was getting revenue from selling these art pieces, both digital and physical, and now she actually has enough time to build out the technology and raise money. So when I think about founders, I often think about giving yourself enough time, and sometimes it's being capital efficient, sometimes it's fundraising to get you to that next point.
I love that piece about trying to increase your luck surface area by buying more time. And I love to kind of pick your brain, Elias, when it came to iterating and running all of those fast experiments. You mentioned that there was a podcast at one point in time, and that actually ended up creating a tipping point. So in terms of the chaos theory of product development, like, what were some of your learnings that you would advise founders in terms of navigating towards a tipping point, or multiple ones?
Yeah, no, absolutely. I think the podcast is an interesting story because for us, David and I had already started companies. We built HubSpot to an IPO. So when we left, we were extremely fortunate to have built a reputation. So we actually launched the company without a name or an idea, and we had raised $15 million in
Wow.
2006, I think. I don't remember. But, and so we had capital, right? And so that was like a really scary thing. But we actually we kept it to a very small team of between 5 to 10 people. And we were just iterating and trying different ideas to see what was going to stick. And in reality, our investors love that, right? Talk about tipping points. You got to kind of embrace. Right now, I'm a tipping point convert, so this one is on tipping points.
This was a tipping point in the panel here.
Exactly. They're real. They exist. And so then what happened is that I remember our investors coming in the board meetings were like, we just had lunch. It's just like 4 of us. And they were amazed that every time we met, we would pitch them a new idea. And we'd be like, this is a $10 billion idea. And we'd be like, and they're like, yeah, sure, no problem, keep going. And so we would do that every month, and we would switch to another idea, and we were driving them crazy, we thought. But in reality, they were so supportive of us, and they would come to me on the side and say, can you help my other portfolio company? They're just so stuck on this idea that they started with, and they're not willing to pivot.
Yeah.
They're trying to make this work, and we all know that it's not going to work. And so now I'm switching, right? It's like you kind of have to embrace it, because how do you know? Should you stick with it, work hard on that idea that we had initially? We started being an HR app, right, when we started Adrift. And now we're MarTech, B2B software, buying software. And we're like, we started with that, and if we would have stuck with that, we would not be where we are today. So you kind of have to embrace those pivots.
How did you know when to kill a product or pivot an idea? That's kind of the hardest part, I think, as a builder. You're so in love with your baby. How do you sacrifice the baby sometimes?
Well, I'm not emotional at all. I have no passion, no creativity, and so it's easy for me to just kill things. But actually, it was not as hard for me. I'm pretty much a soldier in the startup world where I will keep going, and nothing will stop me. As a founder, you just can't give up. But I think that it was really a huge emotional drain on that small team to work on something, and then we had to get emotionally involved and hype the idea, and show them that it could be something big, and then kill it. It was like really draining for everybody, right? And so very few of that original team are still with us, but we do have several, like 3. And it was an incredible testament to their stamina and their patience. But you really have to be brutal, and you have to make a decision and force that tipping point.
I love that. So there's an art to finding tipping point, and there's also a kind of willing it to happen as well. I'd love to kind of shift the gears over to Andrew here. When you guys were iterating through time within the first, say, 100 days, what were some of the things you wish you had known as a founder, finding your tipping point?
Honestly, I kind of feel like being naive about it going in is almost better. Ignorance is kind of bliss, and just knowing how challenging it would actually be. Well, the real answer is don't launch a real estate company right before Thanksgiving, because no one moves over Thanksgiving. And so I should have waited till January, which then it took off exponentially immediately. No, but I think I think the kicker is it's really, Vinod Khosla has a great line around the team that you build is the company that you build. And so really focus on just hiring unbelievably sharp people from the very beginning. I think we did a really good job of that, but I do think, probably towards the latter half of that 100 days as we were focused on scaling up, we may have shifted to hiring specialists a little bit too soon. And I really wish we'd just stayed with generalists for probably that first, call it 12 months. And then I wanted to come back. There are a couple of things that came out of this conversation. And I think the thing that everyone should take away if you're thinking about starting a company or already are is just you gotta be persistent and relentless, and it doesn't happen overnight. There's not necessarily that many aha moments. It really is just hard work. And I think it really is having that oxygen of time and rapid iteration, or again, kind of research, right? I'm sure it was customer interviews. I'm sure it was looking at the data and the quant that was coming through. And then for me, that first 100 days, we got one property where the unit economics just made enormous amount of sense. And I could see that scaled up. You go, oh, that's a company. And interestingly, venture capitalists will potentially be more bullish early. And I think as a founder, it's actually more important that you have a higher bar than conceivably some of the others around the table, because this is going to become your baby in your life for hopefully over the next decade, 2 or 3.
Yeah. So it sounds like there's oftentimes a lag time in tipping points,
Yes.
too, between when VCs expect you to hit that inflection point and when the founder and operating team actually does. For the kind of sake of time, I'd love to impart some wisdom to our founders out there. So question, we can start with Samara. What is one advice that you wish you had known as a GP fund manager starting out that you would give your past self starting a new fund?
I wish I would have just done it sooner. I mean, it all happened the right way, but getting even started, I get so many people that say, I have this idea. What do you think? And I'm like, just go do it. Just try it. Just figure out a way to test it out. And if it's a fund manager, figure out a way to do angel investing. There's so many of that right now. Figure out a way to do SPVs. If it's a founder, just go out and do it and stop writing, get away from your desk and writing your business plan and the whole thing. It's never going to be perfect. I have an entire model for how I'm going to get my investors back X amount of their money. And then when I go to market, it's like, oh, okay, that's not going to work, right? It's not, what is it saying? You have a plan until you get punched in the face. That's exactly what this is. And so for me, it's just getting out and do it. And then the last thing is you only need one person, the right person to say yes to get everyone else on board.
What about you, Elias? How would you advise your past self?
I think that we're in Miami, so I have to give something Latino-inspired advice.
Of course.
I would say that I think the thing that I want everybody to take away from this is that everything is possible, right? And so I came here to this country, I didn't speak English, I had food stamps, and I cleaned offices, right? And so this is a great country, and I love the emphasis on Florida and giving everyone here an opportunity. Otherwise, you had to move to the Valley, you had to move to New York, you had to move to Boston. So I'm really thankful that people don't have to move and they can stay within their community and achieve anything they want. And so my goal is for us to find more role models that inspire us that it is possible to build a great company, to become a great entrepreneur, no matter where you come from.
That's very inspiring, and you're definitely our role model here for that, so thank you. As well, Samara and Andrew, we've got many.
Andrew's white.
Yeah. They're role models in many different forms. What about you, Andrew? How would you have, what would you told your young self back
Enjoy
in the
it.
day?
Enjoy
Okay.
the journey. Have fun. It's it is really challenging, but there's so very few things that are more fun than solving really hard problems in the early days with an incredible team. And you'll hit roadblocks. I remember we had a massive data problem one time right as we were about to go into a fundraise, and we had the entire team of 6, I think, in doing manual data entry for basically 2 all-nighters straight with us, and we had a pizza party, and I think it was awful. But I look back on that so fondly, and it's those moments that bond you and bring you together. So, even when you're encountering a roadblock, don't forget to enjoy it.
Yeah, I mean, I think that demystifying entrepreneurship is like, it's really not that hard, right? Like, there's other people that are doing really, really hard jobs, that lives are at stake. It's just like, you could die doing some operation. You could be on the front line at a hospital, other things. What we do might be mentally hard and exhausting, but we want to encourage more entrepreneurship in this country. And like you said, it's really hard, but it's fun to solve those problems, because you're going to wake up the next day and you have another day to go at it. And that's the mentality you have to have. It's like, you have to welcome adversity. Right?
Yeah.
Yep.
Well, thank you all so much for being here and imparting your wisdom, sharing a sense of possibilities with the audience. I've learned a great deal from you guys, and honestly, it seems like tipping points are, they come in so many different forms, and one of my personal takeaways is we must embody this agility of being able to move fast and, kill our ideas and babies and pivot into the right tipping point. But there are multiple tipping points that lead us here, and we're all here because of those culmination of those tipping points. So thank you so much, Samara, Elias, Andrew, for holding space for this conversation.
Thank you.